Hi, everyone. Welcome to the Hangout. I'm glad you could make it tonight. We have the Hangout every Thursday night, and we do training for real estate investors. So I'm glad you could make it tonight. And tonight we're going to be talking about how to find private lenders. And I know that's a topic that every real estate investor needs to know about. It's near Christmas, so I've got my Santa hat on. Next week is Christmas on Thursday, and the following week will be New Year's. So we'll be skipping the hangout for the next 2 weeks. Everyone take a good vacation. Anyway, tonight we'll be talking about how to find private lenders, and I have some great things for you. I have a bunch of spreadsheets and a couple of handouts, take-homes, things that are really going to help you in your real estate business. So let's jump right in, and I'll move over to the side and get started so you can just kind of see what's on the board to get us started here. Whoops, other way. All right. So I'll just go through what we're going to talk about tonight. I'm going to talk about private lenders versus hard money lenders and give you a list of some of the expenses that do happen when you have a hard money lender and you borrow from a hard money lender in order to buy a real estate investment property. Then I'm going to show you a little bit on my ebook, what's in there. I have an ebook on private lending, and I'm going to talk to you about different ways to find your own private money lenders. I will show you an investment comparison, and it's a spreadsheet. It's a gift to you that you can use to show to your private money lenders. I'm also going to go over some software called Rehab Valuator, and that software lets you make a little spreadsheet to show the return that your hard money lender is going to get, and that's something that you can show them, and it looks very professional so that you can show them about your deal. All right, so let's get started. So those are the topics for tonight. All right. So first of all, let's compare hard money lenders and private money lenders and talk a little bit about the kind of costs that you have with a hard money lender. And for that, I'm going to jump right over to my ebook. And if you're following on Google or on YouTube, I have put on the Google event, I have all the links for all the documents that I'm showing tonight right underneath the event. So if you go to the event page on Google, you'll find it. And also, if you're on my mailing list, you were already emailed a few of the documents so that you could have them for your benefit. If not, go ahead and subscribe to my YouTube channel. Circle me, Wise Wealth University on G+, and go to the event, even if you're watching this at a later date, and you'll be able to see links for all those documents. So just find Wise Wealth University on Google+, and you'll be able to find the links for all the documents, because I put them on here for you in Google Docs. So you'll be able to take a look at them. And then you can also go, I'll give you the link later, to my website, and you can get the private lending book there, the ebook. I think I might have a link to that. Anyway, that is wisewealthuniversity.com/PV lending. P as in Paul, V as in Victor, PV lending. And you can download the PDF book there. And there's also a 10-day e-course that goes with it that walks you through all the steps you need to do in order to find your own private lenders. So let's jump right into the comparison, hard money lenders versus private lenders. Okay, so I'm going to screen share and let you see that. Here we go. Okay. All right, so here's a page from my ebook, and what I do here is list a lot of the junk fees that go along with hard money lenders. Let me talk a little bit about where hard money lenders get their money from. Hard money lenders can either be lending out their own money, or they could have a large line of credit from a bank and be lending out the money from the bank. So they're charging a higher rate for that. The third way they can do it is if they have their own private money lenders. So what would happen is that a hard money lender would develop several private money lenders and then lend the money out to you. So their private money lenders may be getting 10%, but they're lending it out to you at between 12 and 15% and tacking on all these fees. So this is really how they make their money. They may have a line of credit from a bank at 6% and be lending it out to you at 15, or be using their own money. So let's go through some of the fees that go with private money lenders. The first one would be points. They definitely add on points. Now, the points are not just on the purchase price, but they're on the total loan. So sometimes the loan involves the rehab money as well as some purchase money. So they're going to have 5 points on there. And here I'm giving an example for a purchase of $42,000. And this was a deal that we did a while back, and this is really what it cost. So they do a credit report because they want to know what your credit is. They do a draw inspection fee of around $500. So whenever you do a draw, in other words, whenever you draw from the rehab money, they're going to charge $500 to send someone out to look at the property to see how much you've done. Sometimes that can be 2 or 3 times during the rehab process. They will have a funding fee. That's usually a percentage of the loan. The funding fee is just because they're funding your deal. There's a renovation administration fee. Sometimes that's just for them to analyze and check on your deal. To me, that overlaps the draw inspection fee an awful lot, but they think it should be a separate fee. There's a processing fee for the loan, like any lender would have, an underwriting fee for the loan, like any other lender would have. But the other fees are really something that you don't see. Those 3 fees in the middle, between the credit report and the processing fee, are things you don't see on a normal loan. So for borrowing, the purchase price of, in this example, $42,000, and the loan was $66,000, there was a whopping total of $8,217 of fees on that loan. Well, they've really taken quite a bit of profit out of the deal before you even get started. These all come out when you purchase the property. So just wanted to let you know that that's what the fees are. So that's really one of the ways to compare it. When you do a private money lender, this is someone that you know, and you're setting up the program, so you may pay them a basic 10%, which is certainly a great opportunity and way more than they can get from other investments. But you don't talk about points and draw inspection fees and all that because they don't understand rehab. They're not the one doing the rehab. They're the one lending the money. So all of these fees disappear. In fact, there's no processing fees or underwriting fees, credit report, or anything, because they're a private money lender. And so that is really one of the best ways to obtain money for your deals. All right, so let me now switch over to a different spreadsheet where we're going to look at an example of a property, and we're going to be able to talk to our private money lenders about that particular example. So first, I'm going to give you a link to a spreadsheet that I did showing an investment comparison. So I'm going to change the screen share a minute. And unfortunately, you have to stop and then start again. So let's see. Okay, and then let me screen share again. Find the next sheet that I want to show you. Here's my example. Okay. All right, so here's an example of a purchase that you might do with a private money lender. And I often give them an example so that they know how the deal works. It's often a mystery to the private lender how you actually can pay them interest. They're used to a homeowner paying interest to a bank, and that's the side that they understand. So they don't understand when you flip a property how you can be paying interest. So this spreadsheet really helps them understand that. So in this particular example, the house was purchased for $180,000, and I'm giving you a price that works in some parts of California, obviously in the less expensive parts of California, not. And I'll give you the San Diego example in a minute where it's a little bit higher. And certainly some places right now are too high to even do this. So if you decide you're going to have about $20,000 in repairs and you take out a loan with your private money lender of $200,000 and you are paying them 8% interest per month, that's how the acquisition would look in the top line here. There's going to be about $6,000 in closing costs, and the interest is $1,333 per month. But you don't pay the interest on a monthly basis. We pay the interest at the end of the deal because that's where you're making the money, and you can pay the private lender then. Unfortunately, with hard money lenders, they make you borrow the payments and then pay it back to them, and then you're paying interest on all the money you borrowed from them. That's not how we work it with a private money lender. So in this case, I kind of have you paying your own closing costs, and I'm just having the $20,000 repairs go into the loan with the purchase price. So in 6 months, this is what your holding costs would be, around $8,000, and then I added in some extra for utilities. So here's your two possible exits, and this is what you explain to your private money lender or your potential private money lender. When you sell in 6 months after it's rehabbed, you are anticipating a sale price of $270,000, and that's based on the comps. And you can even show them an example of comps, in the area. You owe $200,000 for the loan plus another $8,000 in interest. You'll probably pay a 3% commission to the buyer's agent to find you a buyer. We usually do a flat fee listing so that we're not paying a seller's agent. This might be what your closing costs would be. I just estimated as 3% of the purchase. And I threw in some extra miscellaneous, like a warranty, or if you have to fix something just before you sell it. In this example, the net would be $44,000. Now, that's a pretty nice deal. It doesn't happen all the time, and often your repair bill would be higher than this, but at least you have plenty of wiggle room. Say your repair bill was $30,000 and you only made $34,000 on the deal. I think you'd still be quite happy. I know most of us would. Your other exit strategy is that you could rent out the property, and this would be sort of the lower end rent for a house that's worth $270,000. So that's conservative, the lower end on the rent. So $1,650. And what I do with the private money lender is I explain if we decide to keep it as a rental, and of course you want to know your exit strategy going in because you rehab the property in a different way if you're going to flip it. But say, for example, the market turned on you and you couldn't really sell it, then your second exit strategy is, well, we'll rent it until the market gets a little better. So if you got a 30-year loan at 6% interest and you had an amortized loan on the property, you'd be paying $1,259 a month just for the mortgage. If you still have your private money lender, at this point you may want to have a conversation with them about putting a note on the property for 6% interest. So if you had 6% interest on the $208,000 that you owe, it would cost you a little over $1,000 a month. So what I've done here is done that. I've added insurance, management fees for a property manager, what the taxes would cost, because your taxes should be $180, but the taxes are based on what you bought the property for. So a cash flow a little under $200 a month. If you lease option, you might get a little bit more on that, but check into the new rules from Dodd-Frank on all the lease options. I know you can't get any rent credit. You can't give any rent credit anymore when you do that, and your lease and your option have to be totally separate. So with that cash flow, I can then be paying that would be my cash flow after I paid interest. So the interest comes from the rent. So you explain to your private money lender that in this case, the interest that they would receive comes from selling the property. And in the case of renting, the interest they receive comes from the rent that comes in every month. And that's a really clear and good example and a way to show your private money lenders how you can pay them back, because I find that sometimes confuses them, like, where does the money come from? I'm going to switch over and give you kind of an example of a little bit higher price property, maybe Riverside. San Diego is really above this cost right now. But this is an example from a house that we did a few years ago when the market was a little bit lower. And it could work for a condo or whatever is in your market in this price range. In this case, the purchase was $226,000. I figured 8% interest, and I figured that repairs would be about $33,000. In 10 months, in 6 months, the holding costs are about $10,000. Our two possible exits for this example would be to sell the property at $325,000. This would be what we would owe at that point. That comes from the loan plus the monthly interest, the holding costs here. The commission, I think in this case, yes, I put in 6%, but it really could be 3% in that case for the buyer. That would increase your profit if you just had a buyer's agent. This would be the closing costs, and sometimes you have to pay part of the buyer's closing costs depending on how the market's doing at that point. So my net for this deal would be $22,000, almost $23,000. If, for example, prices went down and you didn't really want to sell it until you could make a little more money, you could rent that house for about $2,000 a month. You could get a 6% interest rate from your private money lender. Insurance, management, and taxes, you would still have a cash flow of about $200 a month. So that's a second example of a type of deal that you could do. So it's good to bring a spreadsheet like this when you meet with a potential hard money lender. A private money lender, so that they have some idea of how their investment's going to work out. All right, so my next example is a spreadsheet that you can take and show to your private money lender. It's not an example of a deal, but it's an example of comparing their particular investment to the investment that you're offering. And after we go through that, then I'll talk to you a little bit more about how you talk to your private money lenders. Okay, so let me screen share again. Here we go. Okay. This is a sheet that I came up with for you guys, and I want to give it out to everyone, and that's why the link is on the event page. So you can go ahead and grab that. What I did was do an investment comparison of what your private money lender could get if they invested their money in different types of investments. So for this example, I used 100,000. They may only put 50,000 into your deal, but I used 100,000 because it's easy for people to imagine. So if they invested $100,000 in the S&P 500, it was in an index fund, and they left it in for 10 years, say from 2004 till the end of last year, their annual percentage rate would be 7.34%. Now that's the average rate. Now the market's gone up and down, but what happens when the market goes down is you lose some of your principal and it's not available to reinvest the next year. So even though a few of the interest rates are a little bit higher than this, once you take into account that you're losing some of your principal on the years that it goes down, your actual interest rate is 7.34%. And I got that from historical markets, historical returns. You can Google it, and I'm using the geometric average. If you go over 50 years, you get closer to 10%, but most of your private lenders are not going to have their money invested for 50 years. They're probably in their 40s or 50s, are looking to build their retirement savings, and they don't really know what the market's going to do. So for example, in 2004, the S&P went up 10%. In 2005, only 4%. In 2007, only 5%. In 2008, it went down 36%. In 2009 and 10, it recovered, but in 2011, it was only 2%. And in the last 2 years, it's gone up quite a bit. But when you average that, they're only going to make 7.34%. In this example, what I did was use a 10-year term, because you're talking to a private lender. They may fund your deals for 2 years, 5 years, maybe 10, but that's probably the length of the horizon that they're thinking about right now. So this would be the monthly interest that they would get at that rate of 7.34%, total interest they'd make over those 10 years, and the total amount paid out. So I gave some other examples. If they had it in a CD, and I'm not saying 1%, I put it at 1.5% because it's a longer term CD. Sometimes you get a higher rate at maybe a 2-year or 3-year CD. Still, for 10 years, here's their monthly interest payment. The total interest they would make is only $7,000 after 10 years. So that's not a very good return. This is really what most people are looking at as an alternative. That's where their savings are. They do have some money in stock, but they have cash. And when they invest with you, their principal is secured by the property. So they're not looking at the ups and downs that cause this interest rate. They're looking at a 10% return. So on flips, we usually pay about 10%. So I put that in as the interest rate. So for 10 years, this is how much interest, if they were continually invested in flips with us or with you, they would make $58,581 in 10 years investing in your flips. If they invested some money in rentals and they wanted something long-term without all the paperwork and the ins and outs of going in and out of deals, they would make $33,000 with their original principal of $100,000. And at the bottom of the sheet that I gave you, so I show, here's your initial $100,000, and then showing what they would make on flips with you, what they would make in the S&P 500 index funds, what they would make on rentals, and then again, what they would make if they kept the money in a CD. So that's a sheet that you can get. Again, it's on the Google event page for our Hangout tonight. All right, let me go back and go back to our whiteboard and take a look at our list, and we'll talk about different ways that you can find these private lenders. All right, so let's take a look at what we've done so far. So we talked about hard money lenders versus private lenders, and I talked a little bit about what was in the ebook. But what you're going to find in the ebook are some scripts, and the scripts are good ways to talk to your private money lenders. So it's really good if you want to download those scripts. It'll talk about how you start the conversation with them, how you talk about how are your investments doing lately. Do you know anyone who's not making 8 to 10% on their investments? And of course, right now the stock market's pretty high, so a lot of people are doing well, but some of the older people don't want to be in the stock market because they know that it can fluctuate. So there's some scripts in there that you can use in approaching your private money lenders. Hope everyone has their hat on because I'm wearing mine. Keeps you warm. So I'm going to talk a little bit about how to find your private money lenders. And the important thing here is your mindset. Now, when you're working with private money lenders, you may think, oh, I'm asking them for money. And when you feel that you're asking someone for money, a lot of things go on up here in your head, and that's not what you want. Okay, you want to change your mindset. You have an opportunity for them to make money that they can't get anywhere else. There's nobody else offering 10% on their money. Okay, so it's an opportunity, and it's an opportunity that exists because they know, like, and trust you. They know you. This is not something you get at a bank. It's only something that works between people that you know. So let's go through the list. All right. So here's how you find people like that. You need to take out your phone. Okay. Take out your phone, take out your email list, take out your contact list, and go through. You're going to talk with friends, coworkers, people that you work with, people that you frequent their businesses, okay, business owners, dentists, doctors, people who fix your car, a lot of different business owners that you might know, people in your church. So you're going to talk to contacts, your own contacts, and you're going to talk to them about their investment. Find out if they have enough for retirement, if they're worried about what they're going to make and what they're going to have when they do get a chance to retire. Because I know people just really don't like the CD rates today. I think I'm going to take off the Santa hat. And they're worried about those rates. So it's an opportunity that you can offer to your friends. In fact, I often tell people, I know you may not want to do this, but I would feel bad if I didn't offer it to you. And later you said to me, why didn't you tell me about that? So I sometimes talk to people like that, and I just let them know, look, you could do this, you don't have to, but I want to give you the opportunity if you want to take the opportunity. So look at the ebook. That is at wisewealthuniversity.com/PV lending. Okay, what it comes with is a 10-day e-course. So after you get the book, then there's an e-course that goes with it. So you'll get emails every 2 or 3 days talking to you about how to use what the material that's in the book and how to approach your private lenders and how to keep track of the different people that you're contacting. Okay, so remember, change your mindset, talk to all your contacts. And also what I do is I ask them if they know someone who might want to take advantage of the opportunity. Because even if they don't have the cash right now, they probably have friends who might want to do it, friends or contacts. So now let's go into what are some of the ways that a private lender can come up with money to help you out. A lot of people have old 401ks. People have gotten laid off a lot more in the last few years than they used to. So a lot of people have 401ks. It's in the 5 mutual funds that their previous employer allowed. New employers often want you to roll it over, but if you stayed laid off and didn't go back to work, you have this 401k sitting there. So you can help them get that money transferred into a real estate IRA. And they're basically called self-directed IRAs. And there's a number of companies around that do self-directed IRAs. Entrust, Equity Trust. There's about 10 different companies. So Google those. UDirect IRA is another one. So, and just look at the different fees and decide which company you would like to go with. They have a lot of online education as well. So you can help your friends, coworkers, and family transition that old 401k into something that they can invest in real estate. So that's a way that you can be of service to them and help them out. The other way is through a HELOC. Some people have a HELOC on their principal residence and they're not using it. The interest rates are really low right now, so they may be paying 3 or 4% on the HELOC. They can borrow that money, lend it to you, and you are paying them 10%. So they're making money on the home equity line that they have on their property. So that's another thing to tap. The other, basic accounts that people would have would be their savings account. So some people have cash in savings that they'd like to use and get a higher interest rate than just the interest at the bank. And the good thing about when you do a flip is the money goes in and out in, a 3 to 6 month time frame, and people feel like, okay, well, I made a little bit of money. Let's try it again. So, and you can always start them on a small amount. I gave $100,000 as an example, but you may go as low as $20,000, $30,000 as their first investment with you. So that's how you can get started. Definitely get the ebook, use the spreadsheets that I gave you. If you're watching this on a replay, we will put the spreadsheets and the link to the ebook also on YouTube, because you might be watching the replay on this. All right, so let me look at the board, and let's see. I think we already did the investment comparison. So I'm going to jump right in now and just look at Rehab Valuator. It's another way to give your potential money investors a spreadsheet that lets them know how much they're going to make on your particular deal. So let me screen share with that, and that'll be our last screen share for the night. Go. All right. All right, everyone, here we go. So this is a spreadsheet, and it's part of a much larger calculation I talked about in last week's Hangout. It's called Rehab Valuator. Daniel Clayman does this software. He worked on Wall Street at a number of different firms. And then when he went into real estate, he started using his financial analyst background to do some software that is of great help to real estate investors. So initially, let me pull up the example here. Last week I showed you, it can tell you how to figure out your closing costs, what's your rehab and flip analysis, how much should your offer be, things like that. But the one that we want to focus on today is on the bottom of this calculation sheet. In fact, there's a lot of things on here. Exit strategies for the flip, cash flows to your lender, what if you're going to refi, and then cash flows to lender. So this is a spreadsheet that you could use for your lender. And once you put your numbers in here for your particular deal, with your acquisition costs, your rehab draw, your interest on the loan, that's if it's a hard money loan, payback on the loan. In this case, it's a profit split. and you have your cash flows in and out and your rate of return, your total interest. So they would see how much money they were making on their cash, which would be really cool to show them. Okay, and there's also cash flows up here for your lender. So if you do get the software, you could have this spreadsheet, print it out, give it to your lender, and it would just look very professional, and that you know what you're doing, you know how they're going to get paid back on their investment. So I recommend that. I put the link as well in the comments section on the Google Plus event page. So if you want to get the link to that, go ahead and go to the event page on Google Plus. It's an event on the page wisewealthuniversity.com, or sorry, Wise Wealth University on Google Plus, and that's where I put the link. I'll also put it on my page. I have a Wise Wealth University page on Facebook, and I will put the link for this software there. Now, this is free software, so you can download it and use it as much as you want. It's in Excel, so you can, crank it out, use it as many times as you need to. So I'll put those on my Facebook page and on my Google Plus page, so you can have that link. Anyway, so that is our summary of private money. Let me go back to our regular screen here. All right, everyone. So what I want to do is just show you how you can follow us, how you can contact me. Oh, I forgot to tell you about the trees over here. I put a few Christmas trees up on the board. So you're growing your private money tree. So it's all about contacts, your network, the trust that you have with your friends and your coworkers and the people that are going to be working with you. So trees don't grow overnight. This is not something that you go out and get tomorrow. I suggest people look for their lenders before they have a deal, because when you have a deal, it just takes too long to find, and you're going to end up with a hard money lender who's really going to take most of the deal and most of the profit out of the deal. So grow your private lenders. They're your private lending tree. Just remember that. Anyway, next week, we will not have a hangout. It's Christmas. And the week after is New Year's. We won't have a hangout on that day either. So anyway, thank you very much for attending the hangout and learning about private money lenders. Again, if you want the ebook, wisewealthuniversity.com/PV lenders. And I will show you that page. I have one screen share here where I can click on the page and show you the actual lending page. I don't want to do let's see if I can do it here. Oh, that's the infinity. Well, let's not do that one. Let's do another one. That's going to be a little hard to show. Okay, there's my Facebook page, the Wise Wealth University, and I will have the link there so you can go directly to the website. I know I can find the private lending ebook. Here we go. And I'll show that to you. Here we go. All right, so if you want to go to my website, wisewealthuniversity.com/PV lenders, you will come to this page, and you can download the ebook. You can do more deals, bigger deals than you can with any other form of lending, and that's why you need private money lenders, because your money and credit will run out after a few deals doing it the conventional way. The high cost of hard money suck the profit out of most deals. So go to the page, download it. Once you get the download, to your email, It's a PDF. You will automatically get the 10-day course to keep you on track with using the resources that are in the book. So I want to share that with everyone. So thank you very much for being on my Hangout. I hope everyone has a wonderful, wonderful Christmas and a happy New Year. We will analyze a few deals in January. So if you have a particular deal that you'd like analyzed, put that information in the comments on one of the pages that I mentioned, and we will contact you about analyzing your deal right here on the show. So just go ahead and send me information about the deal. And we'd like to have a few of our people who watch, our followers and students, so that we can analyze a deal for them. Because right now I've been talking about the first two of the 4 F's, which is finding the deal and funding the deal. So after we go through that section, then the other 2 topics I'm going to cover are fix and flip. Okay, so before we move into fix and flip, we'd like to analyze the deal of a couple of students. So go ahead and put that on my Google Plus page or my Facebook Wise Wealth page, and we'll analyze those on one of the future Hangouts. You could be the lucky one. So thank you very much for being with me tonight. I enjoyed the Hangout with everyone, and we'll see you in January.